Hello, Decision Point faithful and chart watchers. Welcome to this Decision Point show of June 6th, 2022. We've been on hiatus for the last 3 weeks due to travel, but we are now back better than ever. How's everything going for you, Dad, up the hill there?
I'm afraid I might have to be retrained after 3 weeks off.
I know, right? We did have some evergreen shows for you out there, but I know tons of people have been wondering what's our opinion of what's going on in the market. And well, here we are. We're going to give you all of that. And we'll start off with my father, Carl. He's going to do his grab bag of things that he finds interesting going on right now. And then he will cover the market and our indicators, along with the big four, as we call them, and other assorted charts. Then I will take over. We'll look at do a sector overview. It's been a while, 3 weeks, as I was saying. And then I have a couple of diamonds of the week for you that you can add to your watch list. So let's go ahead and we'll get started. I just wanted to show you our Decision Point markets index scoreboard and our sector scoreboard, just so you can see what our intermediate term trend model signals currently are and our long-term trend model signals. So you can see pretty much as far as the market indexes go, we're still in a bear market. We're still seeing lots of neutral and sell signals. Intermediate term trend model, these are going to be your 20 and 50-day EMA crossovers, and the long-term trend model are the 50 and 200-day crossovers. So sector-wise, we do have energy on a buy and utilities. We do have some long-term buys still in effect on some of these sectors, but I'll go over those in a little more detail later on. So without further ado, let's go look at some charts, and Dad, I'll let you take the screen and get it started.
Okey doke. All right, let's start out with crypto. I heard some ads over the weekend, about 3 ads, and they were bothering me for some reason, and I couldn't put my finger on it, and then it dawned on me what it was. When what they pitch is that you're going to somehow become involved with blockchain in a way that's significant. In other words, if blockchain becomes as popular and successful as they think, that you will participate in that. But I don't see any way that that's going to happen. When you put money into crypto, it is managed by blockchain, and you're at the mercy of blockchain, but you have no way of participating in that blockchain technology. So something to keep in mind. And while we're looking at this chart, this support keeps holding. We went down below that support intraday, but it did close above it, and that was about 3 weeks ago. And this particular thing, it bothers me. I'm wondering if we had crash prevention team intervention there. But God knows what the Fed might think they need to do. Okay, moving on to gold. I read an article today where a technical analyst was talking about gold having a long-term cup with handle. And I've always thought of this formation as being lower. In other words, it's part of a bottom formation. But I looked it up in Bulkowski's book, and it's legitimate at this level. So we have the long term here here's the handle, and also you could look at this as a cup with a handle as well. Mm-hmm. And so that's bullish for gold. And I really think, I think I've been thinking about with the disasters that we have coming towards us, it seems to me that gold is the only vehicle that is halfway safe. Mm-hmm. No guarantees, and that's not a recommendation. That's my opinion. Amazon split 20 for 1 today. We're still not the data provider still hasn't updated the earnings. This should be like when you split 20 for 1, you should divide the earnings by 20. So that would put it at about $2.07 a share. So the PE is up around 60. But there was some excitement about it. You can see in the toenail.
Toenail.
The thumbnail chart here that traded much higher, and then it was up 2%, but still looks more like a shooting star formation. I don't think that the only thing that might do for the stock is that it might become a member of the Dow 30, the Dow Industrial. So that's the only thing at this point that I see that is good about the split. Another item I heard this morning was that June 21st, there are a lot of changes in the components of the S&P 500 on the way. I didn't hear what those changes will be, but it's something to keep in mind, especially for the larger caps that might skew it one way or another. Okay, let's get to our charts through the market. Okay, we have really a problem, I think. Right now, first of all, we had the falling wedge, a double bottom breakout, and then it's consolidated. That's not entirely a bad thing, because what we have here is kind of a flag formation, which is bullish. But I'm just thinking the way this got started, it should have been out of here by now, though it hasn't broken down at this point. So, whatever your stop might be, but really hoping we see continuation. We've been bullish ever since this area in terms of the breakout and the consolidation. So again, we're still looking for a continuation. While I'm on this chart, I want to go over this huge spike in volume, and notice that it came on a day that the market moved down somewhat. I don't have any explanation for this that I've been able to figure out, except that it was the 31st of May, the end of the month, and that could possibly be there some churning, some rollover of positions that occurred there. It wasn't options expiration like we normally see, like this was options expiration here. We've got, we're still hanging around the top of the Bollinger Bands. Let me get rid of that crosshair. And it's sort of overbought in this area. You go to a little longer term, a 1 year daily chart. Here's where we should run into resistance. I'm expecting to come here because of the amount of time it's been churning around in this area. It should have gone. I think it had a good enough launch to be here by now, but it's not. So that's the first part of resistance. Here's the next resistance. The very absolute best it might do would be at this level, which would be a total bear trap. The problem is here. We have very, very low volume. It keeps contracting. Advanced decline lines. Still notice the advanced decline line here was a positive divergence. And this was also, I'd say, a positive divergence. But this is the very, very basic level of breadth. The better breadth.
The breadth with depth.
Breadth with depth. It's hard to say. But if you look at with the Silver Cross index, we have the percentage of stocks with the 20 EMA above the 50 EMA. And that basically gives you a really clear picture of what kind of participation we're getting, rather than just a basic advanced decline. Notice that Silver Cross has improved across large cap, mid cap, Nasdaq and NYSE. New high and low chart. Again, this is a really reliable indication when you see this a positive divergence. When you have a big thrust down of new lows, and then you have a lower prices and contraction in new lows. So that did give us a really good signal there. Let's look at the Golden Cross Index. That's the 50 EMA percentage stocks with the 50 EMA above the 200 EMA. That is not doing any improving with the S&P 500. That's at 38% there. The mid caps have improved, but it's still only at 33%, and we're at 20 or 30% with the small caps. So this is definitely bear market level of participation. Let's take a look at the weekly. It's decelerating. The PMO, weekly PMO is decelerating, and which, if it bottoms, that is a good sign. It's very bullish if that does bottom. It's a ways from that right now, I'd say.
Takes a while to turn that thing around.
Yes, it does. And here's the monthly PMO. No sign of that turning around. And again, this is really a major bearish signal when you get the PMO downside crossover. Climax assessment. It's really been, let's see, do we have anything? Doesn't look like it today.
Finally don't have one.
No, we don't have one. Yeah, we've got all these in here, and about half and half, green and red. But always, first of all, you think of climaxes as being exhaustion events, either upside or downside. When they happen at turns, we, up or down price turns, we start thinking that it's an initiation for a change of trend, at least in the short term. So we've had just flags back and forth here, and who knows? There's a lot of activity, but nothing's resolved, and we still have this consolidation here.
Yeah, this is actually, it's fairly unusual to have climax days over and over and over here. In the past, we've not really seen that kind of activity, but it's certainly indicative of, bear market volatility for sure.
Yeah, I think that's entirely what it is bear market. Our short-term indicators. We got a downtick again today, below zero on the STOs. And notice we had these negative divergences all the way down here on the stocks greater than 20, and S&P PMOs rising. So that's part of the, the churning here is causing that. And so far, it hasn't resulted in a pullback. But, and generally speaking, when you see these tops, you get a pullback, especially in this bear market environment.
Mm-hmm. So it's kind of a good thing. I mean, I've been looking at it as those indicators having an opportunity finally to kind of decompress out of those overbought conditions, making kind of giving us a nice setup if we do get the rally coming up.
Yeah, I agree.
Good thing we agree. That's awesome.
Okay, and now we have the intermediate term indicators, ITBM, ITVM, and they are, looks like they're trying to top. Let me put a thumbnail on there. No, still moving higher, but they are at a point where they could be moving, topping out. Certainly this indicator, it hasn't updated today yet, but as of Friday, it had topped, and I see no reason why today, being a down day, that it would start upward again. So it's topped. So again, let's be careful here. If this gets the least bit weak and breaks down out of that formation, that consolidation, I would say head for the hills. Excuse me. Okay, we've looked at Bitcoin. Let's look at the dollar index. Moving higher, it certainly has pulled back. Let's look at a little longer term on that. Let's look at a weekly chart. Okay, so it's up in the range where it could be topping out here. Certainly the weekly PMO has. So if that would be a good thing for gold if the dollar stopped going up. And gold is still putzing around. I have a large position in gold and I plan to increase that based on my comments earlier in the show. Oil is edging higher, and don't expect that to stop. Let's look at the WTI weekly. See what we get. Okay, so there's the most recent high. Let's put it that way in terms of previous highs, and we're headed that way. I don't see why we would stop at this point. Treasuries, let's look at the weekly on that. Okay. This support line is based on this low. So that's the next support we could see, but obviously it's deteriorating, and
well, interest rates keep edging higher, so.
Right. Oh, yes. And where is that chart? I wanted to look at the 10-year. Moving higher again today. So we had a nice head and shoulders formation. It broke down. And as in bull markets, and this certainly is in a bull market, in bull markets, bearish formations tend to not fulfill their promise. And this one certainly didn't. So heading higher again. And I do believe that would be it for me.
All right. Well, if you have any comments to add as I go through the sectors, feel free.
Okay, I hope it'll
So,
have enough time.
yep. So I'm sure I'll be fine. So here is a candle glance of all of the sectors. It has the PMO on it. It has a 20, 50, and 200-day EMA on it, just to give us a sense of bull market versus bear market configurations on each of these sectors. What I've been talking about to my trading room attendees, which I do have a free one on Monday, just go to our homepage. You'll see the ad for the free trading room. Just click on it and you'll be able to register and attend. But one of the things I've been talking about is the location of the 50-day EMA in relation to the 200-day EMA. Because when we have the 50 above the 200, that gives us a kind of a bull market configuration. I won't say bull market because clearly Staples does have the 50 above the 200, but this drop was more than 20%. So take that for what you will. But the main thing is that this has been an area, defensive area that has done well. We had the Target debacle that kind of took it out, but now we have kind of a flaggish look, similar to what we're seeing in the market in general. But clearly, clearly energy is the leadership sector. I'm not telling anybody anything new here, so let's move along. Utilities, looking pretty good, actually, breaking out of this trading zone, got above the 20 and the 50, came back down, tested the 50, and is now taking off again. PMO looking a little bit soft, but ultimately I like the look of that. I was really pro industrials at the end of last week. And honestly, when I see the action that we're getting here, I still am a fan of industrials. But materials are really showing really piquing my interest right now, because we do see that 20-day EMA crossing above the 50-day EMA. It hasn't occurred today, but it should occur tomorrow. That would be a silver cross buy signal. So PMO getting positive now on materials, starting to look really healthy. You have the RSI in positive territory. And then look at the silver cross here. We're now at 50%, meaning half of the material stocks have a 20-day EMA above the 50, and a little over half have their 50 above the 200. It's still a little bit tricky to find a good one there in materials, but you can see that the participation is certainly trying to improve here in materials. Stochastics looking good. And then here's the outperformance that I'm talking about that we've been seeing lately. We do have some overhead resistance here at 88, but I like materials. And like I said, industrials, we're starting to really firm up. As of the end of last week, we still saw higher prices today, but closed beneath that 50-day EMA. Still lots of good stuff on this chart, in my opinion. We have the positive RSI, the PMO rising beautifully out of very oversold territory. You can see OBV bottoms moving up with price bottoms, so that's all good. And then mainly the participation down here. First of all, the silver cross is really taking off here at 31%. And then golden cross, not seeing a whole lot of activity here, but this is a rather beat down area of the market. Stochastics positive, and there's that outperformance that we're seeing as of last week in industrials. But here is what really makes the difference on this one. You've got 80% with price above the 20. That percentage is much higher than the amount of stocks above their 50. So that tells you right away that you're seeing more price coming above the 20, hasn't reached the 50. The assumption is that the EMAs are configured very similarly for these stocks, but you're seeing more get above the 20, more getting above the 50, but more so. We have a bull stack, I think is what we've called this, where you get higher percentage in the short term, goes down a little, goes down, but mainly it's telling you in the short term, lots of strength building in the industrial sector right now. So I'm liking the industrials. So that brings me to a few diamonds of the week. I know at least one of them is an industrial. Water index, I do happen to have this up as an industry group to watch. You could see the move above the 50-day EMA. And I don't know, with drought conditions across the country, particularly here in California, could be an interesting industry group to pay attention to. American Water Works, AWK, is kind of the favorite in that area. Here's an industrial. This is building materials, Generac Holdings, and they make generators, I know is one of the things that their claim to fame. And we have a nice double bottom here. We have a breakout above that confirmation line after prices already overcome the 20 and 50-day EMAs. You've got a PMO now positive, RSI looking good, stochastics, but here you can see that outperformance of Generac to its industry group and then also against the S&P. So I like this one. I set an 8.4% stop. That's rather deep. You could certainly tighten it, but I would set your stop below this confirmation line. And upside potential at this point, I mean, I don't see any reason why I couldn't hit this area of overhead resistance. So I see a pretty good risk reward ratio here. I like to have at least upside potential that's twice my stop level. That's kind of my rule of thumb. So I like that one. High-Right Holdings. This is also an industrial. Nice V bottom on this one. Big move above the 20 and 50-day EMAs, new PMO buy signal, newly positive RSI, and you can see stochastics rising strongly. Really nice relative strength for HRT here. A little bit on the low volume side, just so you're aware, but I like this one. You can set a really tight stop on it of about 5.4%. Certainly could lower that a bit more to maybe this level at $14. Be a pretty deep stop, but you know, everybody has their own risk reward. I think that we could actually come up to this level, but even if we can only reach the level here of that March high, that's still a little bit of almost a 15.5 to 16% gain on that one. So I do like HRT, and I have time, it looks like, for one more. And I'm going to show you AWK because this is one that I found very interesting, and it's down a little bit today. So I think makes it a little more interesting for me. You saw that water industry group chart, and you can see a really nice, that's a little double bottom there, but mainly you're getting this rounded base. You've got really two bottoms developing here. And when you look at the weekly chart, this one's getting very interesting. Double bottom, very clear, weekly PMO turning up. We don't have the positive RSI on the weekly chart, but it's still looking pretty good here for American Water Works. So this was another one that's kind of on my radar as far as stocks to consider. So that was my three diamonds. And we actually just have a few more minutes. Were there any comments you wanted to add?
Yes, AWK happens to be the call signs for the ADF on Wake Island.
Oh, well, there you go. The Wake Island airport initials, huh?
Right.
Yeah, I think that this one's looking pretty good, and it's, you know, it's got a pretty decent yield too. It's not a cheap stock. It never really is, but certainly has some potential. I guess we have 20 seconds. Let me look at gold miners, because I did talk materials. Gold miners, I'm a little bit concerned about. I was kind of pro gold miners earlier. We were starting to see some really nice movement here, but it looks like a lot of this is starting to fail, and we know gold's struggling. So that's all we have. Want to wish you good luck and good trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.